We're joined by David Owen. He's Chief European Financial Economist at Jefferies International. Thank you so much, David, for coming in. It seems that this is expected, isn't it? They were always going to be a negative watch by Moody's just because of the restructuring of the banks. Was it surprising that they were put on negative watch?
Well, the timing is not helpful because you've got a large sort of debt issuance tomorrow in Spain. But in terms of the rating, it's sure to be downgraded. Probably not by just one notch, probably by two ultimately. The issue for Spain, like many of these countries, they're facing not just huge financing issues as we go forwards into next year, but also the interest rate is rising against them. And one of the key inputs that the rating agencies, of course, do, looking at the sustainability of debt, is the interest rate that's being charged on that. So outstanding debt GDP in Spain for the government is not as high as others, but obviously the interest rate's been going up, and that goes up. Obviously, it becomes more expensive to roll over the debt.
Yeah, we spoke to a Moody's analyst saying that they can't rule out a Spanish bailout, although this is not likely. Are you concerned that Spain will have to tap into that EU bailout fund?
Oh, no, absolutely. Well, we just don't know where this is going to end. I mean, hopefully it will end as we go into next year, but all the signs are that this will continue.
Before Spain or after Spain? That's a million-dollar question, isn't it?
Well, hopefully before Spain, but we just don't know. In the current environment, given what's happening in Europe at the moment, it could take Spain with it. I mean, the issue here, of course, is that Spain is so big.
It's huge. So what happens if it does take Spain with it?
Well, I think at that point, hopefully the euro is collapsing, which would obviously help rebalance the eurozone economy. But obviously, the true cost of the overall bailout will be a lot higher, and the ECB ultimately will have to print money. They'll have to basically, buy in bonds in size and not sterilise them.
Collapsing? What kind of level, if we are talking about collapsing? This is pure speculation, but what would be, what would happen to the euro if Spain were to ask for a bailout?
Well, go back through banking crises and you think, well, one of the ways we get around it is the currency to collapse. It's happened in the UK, it's been happening in the US, it hasn't happened in the eurozone. In order to get the currency in the right space, you're probably talking about a level of around about 1 to 110 against the dollar. Now, obviously, that's a long way below the current level. And also, European policymakers seem to believe that a strong currency is good, whereas a weak currency is bad. From my perspective, I think from most...
Do they really believe it, or is that what they say?
Well, why say it? Why not talk down the currency? I mean, if you go through the lessons of all financial history, you need a weaker currency. Spain needs one. Ireland, which is a very open economy, desperately needs a much weaker exchange rate.
And Italy, Spain, I mean, arguably a lot of the peripheral countries would really benefit from a weaker euro.
Yeah, otherwise, let's be clear, Spain faces a multi-year workout from all the imbalances that were built up in the previous period. It had a construction boom, a housing boom. That's going to take years to work out. It's got an unemployment rate currently of around 20%. And all these issues are going to hold back Spain over the next few years. A weaker currency would help.
What would also help is the EU actually speaking with one common voice. How concerned are you that what we're hearing from Germany will just delay events and therefore make it more expensive to bail them out if they need something?
Absolutely. And I think you can understand the frustration of the ECB. I mean, President Trichet said it at the European Parliament a couple of weeks ago. He said it at the ECB press conference a few days ago. The politicians have yet to put the E into EMU. Now, obviously, it's very difficult going back and starting from scratch, but it's not a proper monetary and fiscal union. It's simply not. And that is the overall problem.
But what would be the right way? We just heard from Angela Merkel yesterday saying that, well, she doesn't want an increase in the bailout, but she's also against these E-bonds. So what can the EU do?
Well, the E-bond is probably the most sensible solution. Increasing the size of the fund brings with it other problems because, OK, it's got a AAA rating at the moment, but the more countries tap into that fund, the more at risk the AAAs, which basically stand behind it, will be, because contingent liabilities of all those countries are basically being put on their balance sheet. So you can imagine the situation if they increase the size of the bailout, ultimately it could actually make things worse. But this is where it is. This is EMU. It's not a full economic union.
We talk also a lot about political instability. What's your take on, what we've seen in Belgium but also Italy?
Well, the Italian vote of confidence yesterday was obviously very helpful. But at the end of the day, we're talking here, many countries facing extreme difficulty. Obviously, there's going to be extreme political unrest, and we just don't know how the Irish are going to play as we go forward through next year.
David, thank you so much.